I'm George Ratiu, Manager of Economic Research with Realtor.com. We're at the midpoint of the year, looking forward to sunny summer days, vacation travel, and time with family. The big question for many of us is, how can we balance our to-do lists with our checkbooks in light of rising prices? The Federal Reserve is focused on slowing the economy by pushing its policy interest rate higher to subdue inflation. For now, consumers bear the burden of high prices. The PCE index, which is the main measure of inflation preferred by the Fed, rose in May on par with April's gain and still near the highest level in decades. Consumer spending in May reflected this, showing a sharp slowdown. The pace of inflation is outgunning wages, leaving people with less money in their pockets. Balancing these figures, the number of people filing for jobless claims for the first time declined last week, a sign that the job market remains tight. In addition, continuing claims returned to pre-pandemic levels. Also, factory orders for durable goods like new cars and appliances rose in May. American manufacturers are producing more as they see solid demand for their products, especially for cars and trucks. But at the end of the day, most people want to know they can afford to take care of their families. With high prices, the Consumer Confidence Index dropped in June to a 16-month low. For now, most people feel their jobs are secure, but if companies act on recession worries and layoffs pick up considerably, the mood may darken much faster. Housing markets are headed for a reset as we move into the second half of the year, with rising supply blending with cooling demand. The good news is that, based on Realtor.com data, more homeowners are listing their properties for sale, boosting inventory for the second month in a row, with more sellers who are seeing houses sit longer on the market, leading to an increase in price cuts. At this pace, buyers and sellers will find themselves on more equal footing in the months ahead, a welcome shift after a 2-year period of a severely lopsided market. The drawback is that supply remains below pre-pandemic levels, pushing median prices to a new high. Meanwhile, mortgage rates took a breather in the wake of a 3-week ascent with an 11 basis point drop. But at today's mortgage rate, homebuyers are looking at a monthly payment that's about $800 higher than last year. Data on contract signings this week indicated a surprising bump in May, driven by Northeast buyers rushing to lock in predictable rates and payments. This week, we also released a report looking at condo listings and the alternative they may offer urban buyers looking for affordability. Stay well and enjoy the Independence Day celebration with those close to you. We'll be back next week with the latest update.